Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in the world of business. Today we're diving into a filing from Corner Growth Acquisition Corp 2, and let's just say their latest report hints at a bit of a deadline drama. So what is the big deal? Well, it looks like this company might have needed a little more time to get its act together and find the right business to merge with. We're talking about a company that is essentially a placeholder waiting to combine with another business, and sometimes these timelines get tight. Our focus today is on a specific report filed by Corner Growth Acquisition Corp. 2. This is a special purpose acquisition company, often called a SPAC. Think of it as a company that goes public with the sole purpose of raising money to buy another. Typically private company, they have a set amount of time to find a target for this merger. The clock is ticking for Corner Growth Acquisition Corp. 2. And this filing is all about how they're trying to get more time. The main event here happened on the 23rd of December 2025. The company held a meeting with its shareholders to vote on a crucial proposal. The core of this company is its Class A ordinary shares. These are the shares that shareholders own, giving them a say in the company's decisions. The company name itself tells you a lot, Corner Growth Acquisition Corp 2. They're looking to grow, and they're an acquisition company. The 2 suggests they've done this before or are part of a larger group. This report is filed with the US Securities and Exchange Commission, or SEC. This is the government agency that oversees the stock market and makes sure companies are transparent with their investors. Interestingly, the company is incorporated in the Cayman Islands. This is a common practice for many companies, sometimes for tax reasons or to take advantage of specific corporate laws. Even though they are incorporated in the Cayman Islands, their principal executive offices are listed in Albany, New York. This means while they have a legal home elsewhere, their operations are managed from the US. Now, this is an important point, Corner Growth Acquisition Corp. 2 is an emerging growth company. For these companies, there are certain rules and regulations that are a bit more flexible, often allowing them to delay adopting new accounting standards. They have elected to use this extended transition period. This basically means they get a little more breathing room before having to comply with some of the newer, more complex accounting rules. The main reason for this report is a change in the company's core documents. Think of these as the company's rulebook. They've amended their articles of incorporation and bylaws. This is where the real action happened on the 23rd of December 2025. Shareholders met for an extraordinary general meeting. The big item on the agenda was a proposal to extend the deadline for the company to complete its business combination. This amendment is to what they call the Charter. It is essentially the company's constitution, outlining its fundamental rules and objectives. The original deadline to find a company to merge with was the 31st of December 2025, but they needed more time, so they pushed this deadline out to the 31st of December 2026. This gives them another full year to find that perfect business to combine with. To make sure the vote was legitimate, they needed a quorum, which means a certain percentage of shareholders had to be present, either in person or by proxy. Over 26.9 million shares were represented, which was enough to make the vote official. The record date to determine who could vote was the 18th of November 2025. The shareholders voted on a specific proposal, the extension amendment proposal. This was to formally amend the charter to grant that extra year, and the shareholders overwhelmingly approved this extension. A massive 26,606,769 shares voted in favor of giving the company more time. Only a small fraction, about 308,450 shares, voted against it. This shows strong support from the shareholders for the management strategy to extend the timeline. A mere 250 shares abstained, meaning they didn't vote either way, and there were 0 broken non-votes. This means every shareholder who was supposed to have their vote counted did. Now, here is a critical consequence of this vote. When SPACs propose an extension, shareholders who don't agree with this extended timeline have the option to get their money back. These are called redemptions. In this case, roughly 100,175 Class A ordinary shares were redeemed. This means shareholders who weren't happy with the delay opted to cash out their investment. This represents a tangible outflow of cash from the company. The actual document detailing this amendment to the company's charter is attached as Exhibit 3.1 to this report. While we won't dwell on addresses, it is worth noting the principal executive offices are located in Albany, New York. This is where the day-to-day management likely happens. The phone number listed gives a hint into the company's operational base, in this case a New York area code. Let's look at what kind of securities this company has. They have units which are a package deal. Each unit consists of 1 Class A ordinary share and 1/3 of a redeemable warrant. They also have redeemable warrants. These are like options, giving the holder the right to buy a Class A ordinary share at a specific price. in this case $11.5. These warrants were part of the original units. This is their commission file number, a unique identifier for their filings with the SEC. And this is their IRS employer identification number. So what does all this mean? Corner Growth Acquisition, Corp 2 is a SPAC that needed more time to find a company to merge with. They got that extension from their shareholders, which is a good sign that management has a plan and the support to execute it. However, the redemptions show that not all shareholders are on board with the extended timeline, and this means a portion of the company's capital has been returned to investors. From a Warren Buffett perspective, we're looking at a situation where the company is essentially in limbo. The key for any SPAC is finding a good merger target at a reasonable valuation. The extended deadline gives them more opportunity, but it also means they're burning cash while searching. The redemptions are a cost of doing business during an extension, and it reduces the capital available for the eventual merger. The company's success hinges entirely on management's ability to identify and negotiate a favorable deal within the new timeframe. The strong vote for the extension indicates trust in the current leadership's ability to find that deal. The challenge now is to execute and avoid the fate of simply liquidating after running out of time without a successful combination. The critical factors to watch are the quality of the target company they eventually find and the terms of the merger. If they can secure a solid merger partner that creates value, then this extension was a wise move. If not, it just delays the inevitable. Alright, that is our breakdown of Corner Growth Acquisition Corp. 2's latest filing. What is your take on the SPAC extension strategy and these redemptions? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord linked in the description for more discussions. Thanks for watching, see you next time.